When it comes to DeFi, there's a lot of different categories and use cases that need to be solved. Everything from stablecoins, liquidity services, or even lending markets. But there's one team out there that's looking to conquer all three of these domains that we'll call the DeFi Holy Trinity and looking to find synergies between their product portfolios. And that team is going to be Frax Finance. If you aren't familiar with Frax Finance, Frax is a decentralized algorithmic stablecoin, and in today's video, we're going to cover the landscape of all the Frax Finance products. And what's really got me interested in Frax Finance lately is they just shipped their latest product, which allows you to stake your Ethereum with Frax Finance, and they have incentives, of course, to reward you. What's up, YouTube? I'm Crypto with Nick. I'm a crypto enthusiast and DeFi investor, and I'm always looking for the best opportunities when it comes to everything Web3, NFTs, and DeFi. So be sure to hit that like button, drop a comment below, come join the free community Discord, and let's get into today's video. The first thing I want to do is take a look at the total stablecoins market cap of all the most popular stablecoins, just so that we can look at where Frax fit into things. We can see right now the total stablecoin market cap is at about $146 billion, right? With about USDT representing about 47% of the entire market cap. So if we scroll down here, we can actually see the top 5 stablecoins. We can see USDT, which I'm sure most people are familiar with, as well as USDC. We also have the Binance BUSD coin coming out of here and DAI. And then actually Frax is the 5th largest stablecoin. Here we have about $1.2 billion worth of Frax currently circulating. What's unique really about the Frax Finance stablecoin is that it's really to date just on Ethereum's mainnet. We can see out of that 1.22 billion, 1.16 billion of it is on Ethereum mainnet alone. And that's because a lot of Frax Finance products are really just home to Ethereum. But I suspect that you will see some more cross-chain functionality in the near future. If you're visiting Frax Finance site for the first time, you're going to see this, the world's first fractional stablecoin, encrypted native CPI, the Consumer Price Index. You're also going to see this message where it's being partially backed by collateral and partially stabilized algorithmically. And we're going to dive in how Frax actually keeps its peg to $1. Now, to understand how Frax keeps its peg, I really want to show you this Medium article written by an investor over at Dragonfly Capital. And so we can see here in this graphic that basically Frax starts with a 100% collateralized ratio, meaning if you want one Frax, you would give up one USDC, right? $1. You would do a dollar for dollar exchange. And the same works when you want to redeem it. Now, this is where Frax is really unique and gets interesting. If Frax trades above one peg, what it can actually do is relax its collateral ratio. Maybe let's say bring it down to 98%. This means that you can mint one Frax with 98 cents of USDC and 2 cents of FXS. This is known as Frax Share or the governance token. And that FXS actually gets burned. And then what would happen is whoever was minting Frax stablecoins would be able to sell it on the open market, right? Getting the stablecoin back to peg. Now, some people have incorrectly compared Frax to something like UST. UST was an algorithmic stablecoin, but it was backed 100% by Luna. In this scenario, Frax is still backed by 100% USDC, and when the collateral ratio relaxes, it could be something like 98% or even as low as something like 90%. So if you visit Frax Finance application, you can actually see a lot of the information we are talking about. Here is the Frax Finance stablecoin. We can see the current price is essentially $1. There is again the $1.22 billion in circulating. And if we scroll down here, we can even see that the current collateral ratio is about 93%. Now, there's been a lot of changes, though, since the market turbulence. Of course, in the year of 2022, a lot has happened, especially with the collapse, specifically of UST. At one point, Frax was actually about an 80-20 split when it came to minting new stablecoins. The team, of course, has taken a much more conservative approach and, as you can see, brought that collateral ratio all the way back up to 93%. And currently, in the moment, actually, that FXS token, that governance share token, actually isn't being burned at this time, but they are looking to turn it back on in the near future. But if you want to bet on the Frax Finance team and the adoption of the Frax stablecoin, this is the way that you would pursue that opportunity, which would be through FXS, the Frax Share governance token. We can see here, of course, it's used for governance and voting. It's used to mint new Frax when that collateral ratio is down. In the future, ideally, it would be burned again, which would, of course, reduce the circulating supply. We can see here that all fees revenue accrues to FXS, as well as the AMO profits and excess collateral is used to buy back again and burn the FXS. Now, if you wanted to bet on the Frax Finance team and their vision, what you're really looking for is the adoption of the Frax Finance stablecoin. And one unique way that they're really getting a lot of adoption and traction is through the curve wars. So this is actually written by Sam from the Frax Finance team, one of the founders. And this right here is truly unique and innovative because he is asking for a Frax base pool of Frax USDC to be put up for vote and gauge for candidacy. And this is massive because this would be one of the first pools to have this eligibility outside of 3Pool. If we take a look at Curve Finance, when I mentioned 3Pool, if you're not familiar, we can see it's here. It's traditionally DAI, USDC, and USDT, and it has about $795 million in this pool alone. You can see it does an incredible amount of volume, almost $40 million today. If we scroll down just a little, right below this 3Pool, we can see that FraxBP pool, which is Frax USDC, coming in at $743 million. If we take a look here to see all the projects that have paired their stablecoins with the FraxBP pool to get more liquidity, we can see it's grown exponentially since that proposal back in May. We can see here we have things like DOLA, BUSD, GUSD, right? These are really well-respected stablecoins, and you can see there's hundreds of millions of dollars that has been incentivized. Another reason why it's so important that Frax Finance develops its base pool on Curve is that it controls an enormous amount of Curve. And if you're familiar with the way that the platform works, the individuals who control the CRV token, the governance token, actually get to control the emissions and the rewards and the way that they're allocated to pools and the weight by them. We can see here that if you provide liquidity for some of these pools, you would get anywhere from 15 to 13%. And the way that you get this additional boost is by locking up your tokens. And the Frax Finance team has a lot of tokens. Without diving too much into the curve wars, I really just want to show a few quick charts. We can see here, this is the curve gauge relative weight. And I want you to look at what are the biggest pieces of this pie. Right, we see this yellow piece here, it's pretty large. This is the FraxBP pool, the Frax USDC. We have another big piece of the pie. We have this one here, which is the Frax 3 curve pool. So we can see Frax alone, just between these two pools, holds 20% of this entire pie. And this means when voting occurs, Frax is able to direct incentives and rewards to their pools, which of course encourages more people to provide liquidity and adopt Frax. I mean, look at this chart. Again, I just want you to pick out what are the biggest bars on this bar chart. It's the first two. It's right here. We have, again, the FXS pool in the 3 curve. $468,000 in rewards in the last voting period. The next largest one, again, is the Frax USDC pool. This is the Frax BP pool. Again, $413,000 in rewards in the latest round. This equals to over $1 million, and this is staggering compared to anyone else. Now that we've talked a little bit about Frax Finance, given an introduction on the Frax stablecoin, how it keeps its peg, as well as how it's driving adoption through Curve, I want to shift focus a little bit into one of their latest product launches, which is FraxETH. We can see here that FraxETH has about 8.37 million right now and has just been skyrocketing over the past few days. They've also recently voted and had a snapshot to deploy a FraxETH curve gauge, meaning allowing them to give incentives and rewards from all those bribes that I was showing you earlier. We can see, of course, it overwhelmingly passed with 37 million votes, 100% basically, with only 700 against it. And if we come here back to Curve and we look at the pool, we can see here, if you provide liquidity to this pool, you're going to earn about 0.4% base, as well as 2.8% in Curve rewards, or as high as 7% if you lock up your CRV, you can get these boosted rewards. Now, it's my understanding that the next round of votes have not completed yet, so you might actually see this even higher. But if you don't have your own CRV rewards locked up to qualify for boosted CRV, you can always come over here to Convex. Convex, again, has billions of dollars locked up into this platform. It's considered a blue chip. If you go ahead and provide them your LP tokens, you can go ahead and earn about 6.5%, which is the projected APR for next week. Again, this is going to give you that 4.9% boost with curve rewards, as well as 1.2% in Convex. We should also talk about Frax Finance launching Frax Lend, which is its own lending and borrowing market. And they did this, I believe, back on September 6th when this article was written. And I think 0x Chaos best describes it here on two main reasons why this is important for the Frax Finance team. One is, of course, increasing Frax utilization. Of course, people can deposit different assets and collateralize them, access that capital, and borrow Frax stablecoin against that, as well as revenue, right? This is, of course, going to allow Frax Finance to get all the fees from any kind of liquidation, any kind of interest rates, which, of course, can be used to buy back and burn FXS. Of course, if we come back over here to Frax Finance and we click Frax Lend, we can see all the different collateral types they are offering: Ethereum, Bitcoin, Convex, that governance token, FXS, Curve. And we see the loan to values are pretty aggressive, 75%, allowing people to borrow. And of course, they're using Chainlink oracles. One more product I want to showcase from Frax Finance before we go into a bit of a summary and kind of wrap up of different strategies and catalysts that are coming up is also look at this Frax Swap, just because I think it's so neat that they went ahead and did it. They're really targeting more of a B2B in DAOs. And that's because they built here this TWAMM AMM. What this really allows you to do is make purchases over a period of time, right? And this is very common with people who want to buy large amounts of large wallets. Because if I wanted to say, let's accumulate $1 billion of Ethereum and I just bought it in one lump sum, they would eat me alive in fees and slippage, and I would just send giant green candles that people would sell into. So this is really important for people who have large amounts of buys and wallets that they enter in over a time period, which allows them to do so. I've known about Frax Finance for a while. We can see here back in April, it hit a high of around $40+ and kind of plummeted all the way down to about $3-4 and currently sits around $6.80 now. If we take a look at the recent price action, we can see back in October, it bottomed around $3.90, give or take. And this is because there was some new regulation FUD that had came out about maybe not supporting any kind of algorithmic stablecoin, but Frax is well positioned to make the collateral ratio 100% really if required, but there is some degree of uncertainty there in the future, and so this is always in consideration when you think about a project like this. But we can see it's rebounded quite nicely all the way back up to around $6.80. One of the largest catalysts coming up actually for Frax Finance, but specifically the FXS token, which could drive this token price higher, is that 40% of the FXS emissions are getting cut. And you can read more about this proposal here, FIP 79. You can see here that they are looking to deprecate this pair, which nearly accounts for 40% of those emissions. So if you want to bet on FXS and the Frax Finance team, what you're really going to be looking for as the primary metric is going to be the adoption of the Frax stablecoin. What I also really love is a lot of products are building on top of Frax's new base pools. You can see here Sturdy Finance, which is the money market on Ethereum. It goes ahead and supports the different Frax LP. Here we have Frax USDC LP, which is only paying about 1.64%. This is going to be given out in curve rewards. What you can actually do is use their one-click looping leverage, if you're familiar with like kind of DGen box back in the day, and it will give you about 11% here on stablecoin, which is pretty nice. For my own strategy, I'm going to be looking at accumulating FXS on some kind of significant dip, right? Of course, there's uncertainty and risk when it comes to something like an algorithmic stablecoin, given that stablecoin regulation is still a bit uncertain. However, I believe the valuation's low enough that the upside potential could be huge. So I'm definitely willing to make some bets here, but we'll see how it works out. All right, that wraps up today's video. So be sure to come join the Discord. It's completely free. If you have any questions, would love to hear your thoughts about Frax Finance. We covered everything about the background of Frax Finance, how the stablecoin keeps its peg, as well as different products in its portfolio. But hope you enjoyed it. See you in the next one. Cheers and happy farming.